Next up here, Meta. We got big news in regards to Meta. The stock should be up, honestly, way more. So here's the deal. Ads are now coming to WhatsApp, says Meta. Advertisements are coming to WhatsApp according to official statement by the messaging platform's parent, Meta, on Monday. The move by the social media and tech giant will contribute to its already strong ad revenue, which rose 16% in the first quarter, which, by the way, on a constant currency basis, that was up like 19%. The company is introducing ads along with channel subscriptions and promoted channels, which are expected to boost the reach of its business and content creators. The ads will appear in the Updates tab under Status and Channels. Quote, the growing popularity of the Updates tab make this the right place for these experiences in a way that doesn't interrupt your chats. The company clarified that its personal messaging experience on WhatsApp is not changing. Subscriptions, promotions, and ads will appear only on the Updates tab, away from your personal chats, the company said. This means that if you use WhatsApp to chat with your friends and loved ones, there will be no change to your experience at all. The new features will be rolled out the next several months. Guys, this is freaking massive. Absolutely, unbelievably massive. To put this in context for a moment here, WhatsApp has over 3 billion monthly active users. Over 3 billion. Now, I understand a lot of people that watch my channel, I think 50% plus of the people that watch my channel, you live in the United States, just like I do. And so WhatsApp isn't nearly as big in the United States as it is international. However, even I have to use WhatsApp sometimes to communicate with some folks that, live in Europe or live in other different regions that might do work for me or whatever, because essentially that's what they use there, WhatsApp. That's how they communicate. Like when I tell them, like, oh, can't we just text? They're like, text? What? You mean WhatsApp? Like, what are you talking about here? We do WhatsApp. And so just understand, this is like a huge, huge thing. And WhatsApp has been growing in popularity in the United States as well. It's just like really, really big around the world. And so when we're talking about monetization of 3 billion users, guys, remember, this is very early days in regards to WhatsApp monetization. Like, the numbers are going to start to stack big. Big for this company. Like, big, big. Keep in mind, Instagram has around think about how much money Facebook makes, Meta makes from Instagram nowadays. Instagram has around 2 billion monthly active users. We're talking about this big dog, and by the way, it doesn't seem like everybody you know has an Instagram. WhatsApp has over 3 billion. This is a whole level up in regards to this. And so just understand, this is a type of opportunity that should add hundreds of billions of dollars of market capitalization to Meta over the coming years, right? And so that's why I say the move in the stock price today was honestly not the move it should have made. But here's the thing. Wall Street has never understood Meta. You got to understand. When this company went public, it went public at almost $40 a share. Right after that, the stock over the next few months crashed to $18. It went from 40 to 18. Wall Street didn't get it. Like, how are they going to make money? I don't know, right? Then we witnessed again, they didn't get it in 2022. They sold the stock and sold the stock. It was a $300+ stock. They sold it down 70+%. They sold it all the way at the lows to $88, right? $88. Just relentless selling. They didn't get it. And so the only thing they ever get in regards to Meta is the money. Maybe some point they'll understand that Meta is going to be like thriving 10, 20 years from now still. But they've never understood this stock. They've never gotten it. Because there's nothing you could ever look at to understand like how big of a deal this company really is, how much it really matters to businesses. There's nothing you can really. We don't have like a past company to look at and be like, oh, I get it. How like Meta is going to be so much bigger even in the future, because we've never seen anything like Meta. Like, people were still trying to, when this company went public, people were still trying to figure out like Facebook and if it was the next MySpace. Like, they never understood this. Then when Zuckerberg bought Instagram for $1 billion, they're like, $1 billion for some app you share photos on? What? Sounds just ridiculous. And now it's like Instagram's probably worth hundreds of billions of dollars. Then when they paid $19 billion for WhatsApp, which, by the way, if you think Instagram's opportunity is big, they bought that for $1 billion. Can you imagine how big the WhatsApp opportunity really is when it comes to monetization, considering Zuckerberg was willing to pay $19 billion for WhatsApp? They didn't get that either, right? They've never understood this company. They've never understood it. but they understood the money. And so as this money starts to really inflow, this is going to be more of a 2026 story in regards to WhatsApp money starting to inflow big. That's going to be the moment they get, oh, whoa, we need to buy Meta stock. And by that time, it'll already be $1,000+. And then they'll be like, oh my gosh, I got to be on this stock, right? They never have understood this company. Never. I feel very comfortable with my Meta position. Meta, I've been saying this for years, Meta will become the largest market cap in the world, in my personal opinion. It's been my opinion. I think it's going to end up being right? So I got $1.1 million plus in the public count invested in this company, right? I feel very, very comfortable. And when I think about, it's so important to have a founder of a company leading your company to the next big opportunities, because a great CEO doesn't have to be a founder. But in order to transform a company to new technologies, a lot of times you need the founder, because founders just think differently. They're able to gather their troops in a better way than just a regular CEO. They're able to see things that other people can't see. And so when it comes to new big tech platform changes, it's very helpful to have a founder. And if we look at the big dog companies, the only ones that have the founder around is NVIDIA and Meta now at this point in time. So we're going into, and I'll explain to you like this so everybody can kind of get this, right? If you look at 2000 and 2009, companies were positioning themselves for mobile technology, for things like apps, for things like the cloud, that were going to become the next big things, right? And if you think about what companies really position themselves well, Amazon positioned themselves very well with obviously AWS and obviously adopting mobile technology for shopping through Amazon as well, right? Which was huge for them. They were led by Jeff Bezos at that particular time, right? If you think about Apple, oh my gosh, Steve Jobs. Like Apple would have never done what Apple was able to do, but they have Steve Jobs there, right? And Steve Jobs was able to position the company perfectly for mobile, right? Perfectly for apps. I mean, heck, they created the freaking App Store, right? He was able to do that in such a great way, and Apple became a multi-trillion-dollar company on the back of that, right? If you think about even Microsoft, I know Steve Ballmer gets a lot of crap. He led the company from, 2000 to about 2014. At the end of the day, he did position Microsoft in a phenomenal way to capture mobile and to capture the cloud. Huge with obviously Azure and positioning the teams and everything like that. And then Satya Nadella has just done a phenomenal job of executing on kind of what Ballmer was doing there. And you might say, well, Ballmer wasn't technically a founder. Kind of he was. He was like the 30th employee at Microsoft. I mean, come on. You're the 30th employee at Microsoft. Like, dude, you're pretty much a founder at that point in time, right? And you think about all these companies, and you think about obviously Facebook with Zuckerberg. He positioned the company perfectly for mobile. Remember, Facebook was just a website at first. He positioned them perfectly with mobile, with apps, right? And in that whole generation, and that was massive. And then obviously with things like Instagram, right? Understanding mobile technology and how that's going to integrate with social media, which is something like Instagram, right? And WhatsApp, things like that. And you think about 2010 to 2030, that's been the time to make all this money. Look at all the money Microsoft's made, and Apple's made, and Meta's made, and all these companies, right? And they've made all this money because they positioned themselves during that particular decade. They all position themselves to make banks of money during this 2-decade span. So what's going on 2020 to 2030 is you have companies position themselves for the next big waves. Those are around augmented reality, virtual reality, LLMs, and AI-related products in general, right? And so who do you think is positioning themselves best to capture this big opportunity over the next decade? My guess is the guys that are the founders of the companies that can really rally their employee forces to really understand on the highest level possible about how to integrate products and services in these new areas for the future. And so my bets would be on companies like NVIDIA, companies like Meta, right? If you think about even Google, Sergey Brin and Larry Page, the founders of Google, they were still extremely involved in Google during this particular time period. And that's one of the reasons Google has made fortunes of money 2010 to 2030 is because Larry Page and Sergey Brin were still around, very heavily involved in all lineups of their business at this particular time, right? So if you want to think about like who do you bet on, for this next big wave of huge money that's going to be made 2030 to 2050, I'm going to bet on the guys that are the founders, man. They're just they're different.
Hey, it's Jeremy. I hope you really enjoyed that clip here today. Would you like the ability to understand how to do your own research and not just rely on others to tell you which stock to buy? Would you like to have confidence in yourself when it comes to making your own investment decisions out there? If you're going to be able to do that, you got to have full understanding of everything you need to look for in stocks, how you can decipher whether a stock is a buy, not a buy, all those sorts of things. That's where my private group comes in to help. The description area down there will have a link to apply to join my private group. We've taken over 1,000 people over time and been able to teach those folks exactly what to look for in companies, how to research companies, how to understand financial statements, understand all the different metrics so you can make judgments on companies. And we've been able to have so many people, an incredible amount of people, hit 6 figures plus in their portfolios, 7 figures plus, even some hitting 8 figures plus in their portfolios over time. So if you're looking to take your game up to the next level and play this on a much higher level, apply for my private group. Once again, the link is in the description area.
Now, next up here, Zuck and Meta. What are they up to here? The whole news about Zuckerberg willing to pay $100 million to poach some people from OpenAI. Like, what? That sounds like crazy numbers, right? So, you know this is my biggest position in the public account. $1.1 million invested. We're up 928,000. Woo! My opinion is Zuckerberg, first off, Zuckerberg's a founder. If he sees something big going on with tech, right, especially given the employee force the company has, given his level of success over time, and given the fact that Meta has basically infinite capital behind them, if he sees a new thing coming out, he's like, I want to go do that. Let's go. This new big thing, we're going after it. We can do it. We can do it better. We can do it way better than what everybody else is doing, right? He wants to go after it. He's a founder. So what I see with Zuckerberg is he wants to lead all the new tech age. The new tech age is around augmented reality, virtual reality, AI, LLM models, right? Being the AI backbone. He wants to do all that stuff because this is what is going to pay massive dividends 2030 to 2050. And he wants to make sure his company is in the forefront of all this, right? Because that's what's going to be the huge things from 2030 to 2050. And so he wants to go after it all. So if that means he's got to pay $14 billion to acquire a good position in another company to really acquire kind of their CEO of that company, like they did just recently with Scale AI, he's going to do it. If it means he's got to pay $100 million to get a top somebody from OpenAI to come over to Meta, he's going to do it. And he's really one of the only, I can only really think of 2 CEOs that have that much power that they could do that. Zuckerberg and Musk. That's honestly the only 2 that come to mind. I mean, I don't even think Jensen's that crazy to like do stuff like this. But that's it. Like, he's the only one that really has the power, the pull, the money, the board of directors, the everything to really say, I want to go spend $8 billion on this. And people say, all right, you do it, Zuck. Like, who are we to question him? I mean, the track record is ridiculous. Look what they bought Instagram for back in the day. Look what they bought WhatsApp for. Look at how they integrated it all. Look at how fast Threads is growing, right? Who are we to question things? They got the number 1 position in AR, VR. Look at how much money they're already making from AI by integrating AI into their recommendations for ads, for content on their platforms. Who are we to question what Zuckerberg does? Come on, man. And so there's very few CEOs. Like I said, I can only think of Musk and Zuckerberg. But the difference is Musk has a different level of money than Musk. Musk obviously has a huge net worth, but his companies don't really make much money. Okay, like Tesla makes hardly any money. SpaceX, is a huge money loser from my understanding, and all his other companies, from my understanding, lose money. So he's got like this big net worth and valuation, but he doesn't actually have any money. Zuckerberg has the money. He's got one of the most profitable companies in the history of mankind. So the difference is Zuckerberg, if he wants to go spend $14 billion to acquire another company and get a top CEO from that company, he can do it. And he can also lay out the vision on how we're going to do this. And people are happy to go work with Zuck too. I'm talking about top people because they know he's going to be going after it every day. He's going to be in the office every day He might even be there on the weekends grinding it out at his desk. With somebody like a Musk, like who knows? You might not see him for 3 months. Like, you just don't know with that guy, right? And there's no one else that really has a pull like that. So that's what makes Meta such a special stock. It's not just, man, they make fortunes of money. Their cash flows are ridiculous. It's also like, you got a real deal Holyfield leading this company, man. Legend, okay? Alrighty, next up here, let's talk about a stock that's down 90%. A lot of people try to get me to buy this stock a couple years ago, man. And I'm so happy I didn't. So happy I didn't. What stock is it? It is Enphase Energy. Enphase Energy used to be a $300+ stock. Today it's in the 30s. It's fallen 90%, right? Might finally actually be worth the risk for people that want to play the solar sector. And I'll speak about if I'm personally interested in the stock at this point in time or not, okay? So Enphase, and by the way, my gosh, like the amount of people that tried to get me to buy the stock back in 22, into 2023, it was a long list of folks. And the reason was, at that time, it was a very hot stock. Their revenues were booming. Company was booming. The stock price was booming. And even when the stock market was doing horrible, Enphase was just going beast. And I looked at the company and I researched, and at the end of the day, I came away kind of feeling like it was in a hype type bubble at that particular time, in regards to the space, in regards to stock, in regards to everything, right? Obviously, that came true. 100% played out, right? And I never played put options on the stock, although I probably should have, right? I probably would have made a lot of money. But that's kind of the way I walked away from it. And so people were buying, this is where you can mess up bad in the market. People were buying the stock hand over fist as it dropped, as it even popped in 2022, as it went from 200 to 300. Those people I don't know if they'll ever get their money back. And if they do, it's going to be a long, long time from now, right? And then additionally, when the stock started to fall from 300 back down to 200, down to 150, down to 100, people were buying the stock left and right? And now those folks are so far underwater, they're down 60, 70, 80, 90% on their shares now at this point in time, right? You're down 90%. You need the stock to like 10x to get back to break even. Even if it does that, you'll have lost years and years and years of value just to get back to break even where you used to be. Meanwhile, you could have been buying Palantir 7. You're going to have been buying Palantir at 10. You're going to have been buying Meta at $100, right? Like, woo! That's the risk. And, I know there's some stocks out there in this market right now that people are glad to flood money into, that are trading at all-time highs and blowing through new all-time highs. And they're plugging money into these stocks at very high valuations when their business models are very hot. And, don't be surprised if a lot of people are down 40, 50, 60% a few years from now on some of those stocks that they're plowing money into right now. I'm like, watch out, man. Watch out. And it happens. It happens quick too, right? And this is not even in a down market. It's gone down 90%, not even in a down market. If you look at the market, it's gone straight up over this time, right? But when it comes to Enphase, they make microinverters, right? I think they're the most well-positioned. The folks I've talked about that really know their stuff in regards to this industry say Enphase is incredibly, entrenched in this industry. They've got great positioning. A lot of the manufacturers don't want to go with anybody really other than Enphase. Like Enphase's technology is excellent, customer service, things like that. Like they don't want to just go with some Chinese company or something like that. Like that's what I've heard continuously to save a few bucks. Like Enphase is the way to go in the end and from the customer experience standpoint, right? And when it comes to Enphase, it shows even in something like this, right? 2,000 plus installers in the Enphase installer network, EIN they call it, right? Approximately 81.5 million microinverters have shipped. The 2024 revenue was $1.3 billion. Their 2024 cash flow from operations was $513 million, a very impressive number. I think they had a lot of inventory, right? 2024 GAAP net income, $102 million. Non-GAAP net income, $321 million, right? And their business is even in the best place right now, by the way. This is not like the boom times it was a few years ago for a company like Enphase. That's long gone now at this point in time. So the fact that they're still making this much money in not a great market for them, it's actually, I think it's pretty impressive. Quarterly revenue, this is something very important. If you look here, they actually are up. Their Q4 was up year over year. Their quarterly expenses were down, which is great. Their quarterly gross margin as a percent was up to 53.2% from 50.3%. So it looks like the business is bottomed, right? Quarterly operating income percent by year was also up very, very nicely, up about 10 basis points there, or excuse me, 10 basis points, up about 1,000 basis points, up about 10 percentage points there, right? Additionally, if you look at the Q1 number, revenue was up substantially, but look at how far off a cliff it is compared to where it was back when things were hypey and crazy, right? Now, if you look also at their quarterly gross margin percent by year, it's increased continuously over the last few years, and now it's at 48.9%. Even in bad times, that's pretty darn good for the company, right? So if I was to play anything in solar, right, it would be Enphase. Like there's nothing else in solar that really is interesting to me. And all these stocks have plunged recently, obviously, because the Senate proposal to phase out essentially tax credits for solar by 2028, which is something that honestly everybody should have expected eventually over time. It's not like they're going to do these tax credits forever and ever, right? Same thing with EV credits and all that stuff. But Enphase is actually interesting. Am I going to go out there and buy Enphase stock? The answer is not right now. Not right now. I'm not interested right now, but I've already added it to my watch list. It's one I'm going to keep an eye on. And, some other stocks that are just very, very attractive, very, very attractive right now that have my attention. But with that being said, could I see myself maybe eventually buying Enphase stock? It's a potential. It's a potential. But I'm not the biggest fan of solar in general, right? Never been. Fortunes have been lost in this industry. Like it's just, not the best. But if you can get in at the right time, at the right price, there's some really good arbitrage there. So we'll see. We'll see. I'll keep you guys obviously in tune if I ever make a position. But if you force me to say, you got to go buy $100,000 of some solar related stock, I would go buy Enphase over the others, right?
Hey, it's Jeremy. I hope you really enjoyed that clip here today. Would you like the ability to understand how to do your own research and not just rely on others to tell you which stock to buy? Would you like to have confidence in yourself when it comes to making your own investment decisions out there? If you're going to be able to do that, you got to have full understanding of everything you need to look for in stocks, how you can decipher whether a stock is a buy, not a buy, all those sorts of things. That's where my private group comes in to help. The description area down there will have a link to apply to join my private group. We've taken over 1,000 people over time and been able to teach those folks exactly what to look for in companies, how to research companies, how to understand financial statements, understand all the different metrics so you can make judgments on companies. And we've been able to have so many people, an incredible amount of people, hit 6 figures plus in their portfolios, 7 figures plus, even some hitting 8 figures plus in their portfolios over time. So if you're looking to take your game up to the next level and play this on a much higher level, apply for my private group. Once again, the link is in the description area.
Alrighty, next one up here, Jason Hunter, JP Morgan. There's bias for the market to correct over the short term. This should be interesting.
Jason Hunter. Jason, good to have you. Thanks for coming in.
Thanks for having me again, Mike.
An impressive rally since early April by really any measure. The persistence of it, the breadth of it, the magnitude of it. But it's slowed down. I was making this point, like in the last several weeks even, it's just kind of had this sort of like smaller steps, narrower ranges. What does that tell you, and how do you think it breaks from here?
So as a technician, when you see that type of pattern develop, the loss in momentum, and even over the last couple of weeks, the breadth has narrowed. Stocks above their averages, stocks at 52-week highs, that's contracted. You look around the globe, a number of global indices, both in DM and EM, have stalled in range since mid-May. That suggests rally exhaustion. And even we look for very specific patterns. Momentum divergence is one we're very focused on. That tells you there's a bias for the market to correct over the short term. We don't think it's going to be major. We think we could see a bit of backing and filling, maybe down to 5,800, 5,700s, given that setup. But that should be well supported there because the seasonals during the summer are still quite positive.
So that's like, call it a 5% pullback from the recent highs you think is in the cards. Is there a way to try to reverse engineer why the market has been, I guess, as resilient as it has? I was even pointing out, we had that little break on Friday and, it didn't even get to its 20-day average, let's say, for the S&P 500.
That's right, yeah. And when you look at the technical setup, really for the last 2 weeks, it's been, as a chart watcher, you're like, okay, this is pretty negative. I should expect negative price action. You think about the headlines over the last 2 days, and you're like, why aren't we getting it? I think it comes down to positioning. I don't think the speculative community is overly long here. The trend-following CTA community is probably somewhat long, but not over their skis. And I think for the retail community, that's really helped power this rally. I don't think they'll try and sell ahead of a correction. You'll have to twist their arm, so it really will have to come from the specs first. before that. I think that's part of the reason why it just hasn't sold off yet.
Yeah, retail traders, I guess, it's kind of like they're maybe slow to sell their losers, put it that way, as opposed to having a more rigid sell discipline. The Treasury market, it gets people very excited when yields have gone up to the upper end of their recent range. But I guess you look over 2 years, they haven't really gone anywhere. So what's that market telling you right now?
So what's most interesting for me looking at the Treasury market, the front end has had the Fed priced for, 3-4 eases for a while.
So I want to talk about something very important they talked about there. Retail investors slow to sell their losers. What? Here's the deal. You got to understand when it comes to retail investors, people like myself, maybe a lot of you guys watching this video right now, right? A lot of us are not retail traders. We're retail investors. We're buying stocks to hold them hopefully for years to go in the future, right? So a lot of times if we have a losing stock, we're likely buying more and more shares of that stock. A good example in the public account is Nike. Nike's a stock I'm down on, right? Nike, I love the stock right now. So am I going to go sell Nike? No. If anything, I want to buy more shares of Nike. I'm in no rush to sell that stock at all. I would be happy if I sold that stock 5-10 years from now. I don't want to sell it now. I don't want to sell it next year. I don't want to sell it in 2027. That's a stock I'm buying and buying and buying every share in sight right now because I'm going to feel very comfortable holding that for several economic cycles likely. Nike is a type of company and brand that you can hold for decades or generations, right? And so I look at a time period like now and I'm like, yeah, I'm down on that stock. I'm happy to buy more shares, right? And so that's the other important part, I think, that gets forgotten about when we talk about retail traders, right?
Well, it's pretty much range bound. For this year, though, the term premium, the weakness at the long end, the curve steepening, the narrative around that, both the loss of U.S. exceptionalism and the questioning around fiscal discipline. What's interesting is the bonds actually carved out a decent multi-week yield top pattern as it's retested the cycle cheap, let's call it 415 to 418. And I think if you were to break through, 515 to 518. If you were to break through 480, I think you could see a decent...
On the 30?
On the 30-year bond. I think you could see a decent impulse to lower yields as far as 460, 455, given the way that the chart's set up. And I think that's very much an out of consensus type setup. And when you think about the sentiment and narrative where it is now and the chart forming that, as a technician, that's what gets me excited because it's very much against the grain in terms of what the narrative is out there.
Sure. You mentioned that on the equity side, things have kind of narrowed out, as the rally has matured. What would you think tactically in terms of parts of the market that look better or worse positioned, that maybe they would do worse in this pullback you're expecting, or that you would expect to kind of outperform?
Well, ahead of the headlines this week, it was the deep cyclicals, including materials, energy. And when you looked at the commodity markets, they seemed very much well contained below their breakdown levels that occurred in March and April around the tariff headlines. And that very much looked like, so that's still the case with materials. In fact, the base metals look like they are exhausted, and some are already rolling over. Energy, a whole different story because crude squeezed through its resistance in the 60s and got to 80, and we'll see where it gets before this current crisis abates. But I still think probably the more cyclical side of the market, small caps are also well contained below their breakdown zone. They're probably the more vulnerable. It looks like people are crowding back into like the quality, the Mag 7, the big AI tech name. That seems like that'll be the one that holds up well if the market sets.
Yeah, maybe.